we started looking at our, we look at our own customer portfolio, and then we saw, okay, what type of, can we define what our, can we define our ideal customer profile based on that, and based on our, their ability to pay, and profitability and churn and so forth, and then we combine it with our external data, and so can we find more of these ideal customers in the market? And when we did that, something magical happened, because our conversion rates, they just surged, from, so we do outbound activities where we call businesses that we think need our product, and our conversion rates surged from 3% to 15%, for booking a demo in 1 quarter. And we realized that, the opportunity with this data, when you look at this process, is much bigger than just the credit risk management side of things. So that's, our vision is to find the best way to unite finance and sales, because they're linked together through this process, by helping them basically, de-risking their sales funnel.
So Timm, welcome. Thank you for coming. Tell us a bit about who you are and what you do.
Yeah, so first off, thanks for having me. I'm Timm. I'm the CEO of Risika, the cheerleader with the fancy title. I'm here to talk a little bit about credit scoring and how we see that evolving hopefully over the next couple of years. So, what is it and why is it a problem?
Exactly.
Actually, based on a report we found from Ernst & Young, we've estimated that B2B enterprises, they lose more than $70 billion every year on SMEs, on losses, and we know that in the United States, for example, they have the amount of outstanding invoices at any given day is $3.1 trillion. That's almost 15% of the GDP of the US. And in Europe, 1 out of 4 bankruptcies are directly related to bad payers. So these B2B enterprises, they face a very real problem. They're losing a lot of money. I think that's probably the starting point. That's where we saw that something had to be different, because it's not like there is no other companies or other players trying to solve this problem. There is, and there've been for a long time. But since there's still all these losses in the world, we believe that there must be a different way to do it. So that was the starting point for us.
Okay, so for the audience that might not be too much aware about this specific topic, could you explain to us a little bit what is credit scoring?
Yeah, of course. So say that you want to have a loan as a private person. That's probably you want to get a house and you want to get a mortgage. There is a credit scoring involved in that process, which is the bank wants to know what is the risk of giving you this loan, so you can get your house, buy a house. And that is basically, you do a credit scoring, the bank does a credit scoring on you as a private person, and what we do and help our customers with is to provide them with a credit score on businesses. So in the same fashion, banks, they also do loans to businesses, but actually the space that we are focusing on right now is just when businesses do business with each other. So I think a good example is a wine wholesaler. It's a wine distributor that sells wines to restaurants. Mm-hmm. Normally what happens is that they send a box of wine and then they send an invoice and tell the restaurant to pay in 30 or 60 days. The problem then arises if that restaurant either can't pay the bills because they don't have enough money, or they won't pay the bills maybe because it's a fraud case, or for some other reason they just don't want to pay the bills. That's a credit risk. because then, as a distributor of wine, you simply don't get your money, but you have delivered your product. And that happens all the time in different industry and between different businesses. But it's basically the same as giving a loan worth the value of the product or the service that you deliver. And then we help the wine distributor assess the risk before they send the product. So in some cases, if there's a high risk of it being fraud, or the high risk that they can't pay their bills, or maybe there's a high probability that the restaurant will go bankrupt. We've seen that during the COVID period, for example, the risk goes up. They want to get their payment up front for the wine instead of taking the chance, and that's what we help them with, assessing the risk before they just ship the product and give credit to the restaurant.
Great. So is this the real problem that you're helping the business owners with, or are there any more problems that you're helping them out with?
I think that's the core of the problem. But what we've found is that the way that the industry or the businesses have looked at this problem before, it's a little bit different from the reality that we see when we talk to the businesses. So let's take a step back here and look at this wine distributor again. So you would say that whose responsibility is it that you take this credit risk? Like, who's responsible for giving 30 days or 60 days or 90 days of payment, and if the restaurant doesn't pay because it goes bankrupt, for example, whose responsibility? You would normally think that risk is on the CFO, or on in a larger operation or corporation, it would be a head of risk, or a chief risk officer, even in a bank. But actually, you can't give credit on an invoice or on a loan. Can't give a loan without selling your product first. So what we've identified is that it's one process, and it links the finance department with the sales department. And that's really where we see the big problem is here. The problem is not so much, can we give the businesses a better model? That doesn't really matter if the salespeople are not using it, if they're taking the decision when they're selling the product. So we see this more as an implementation product. And there you need to focus more on having a great user experience. You need to focus on automation across departments, across different systems, and that's really where we and Risika are focusing our efforts. It's also nice to have a good model, but putting together different data sources and using machine learning techniques, for example, you can come a long way. But you don't need like super fancy exotic data sources, for example. You can actually make pretty good predictions on what's available today. But if you don't use the credit scoring in your company, it doesn't matter how good the model is. So yeah, again, we see the implementation problem as actually a bigger issue. So
the true difference is not the prediction of the data, but is the application of the data that you're working with.
Yeah, I would say so. It depends a little bit on which type of customer, which type of business we're talking about. Because obviously, if you're a bank, your only product, or you have other products, but your main product is to give out loans. It is to give credit, and there's less it's the core of your business is your ability to calculate this risk in the best way. Mm-hmm. And that's where even like very small percentages or smaller small improvements in prediction power, it also means a lot of money. But if you talk about normal B2B businesses, you can come a long way with building a model on top of the data you have today, but then focus more on the implementation part, because CFO buys the best model in the world, but if the salespeople are responsible for giving credit and they just give all the credit they want because they're focusing on the top line, it doesn't matter. So I hope that gives it. It's a little bit different from business to business, but in general we see a bigger problem with the implementation.
So where is the vision guiding you? So right now, short term, as you described, you see that this problem is quite scalable, or it's quite suitable for this type of customers. How about in 5 years' time? Where do you see that going? What direction would you like to take?
So when we started looking at this process in a whole, and we saw that the opportunity was surrounded about understanding how we could get the finance department to work closer together with the sales department. We got access to both the public available data, but also started getting access to some of the company data. We realized that there were some different opportunities in the same space, so to speak, and so we're working on, like, our vision is to not only help businesses with the credit risk management, but also help them with their sales enablement. So taking our own case, for example, we started looking at we looked at our own customer portfolio, and then we saw, okay, what type of, can we define our ideal customer profile based on that, and based on our, their ability to pay, and, profitability and churn and so forth. And then we combine it with our external data, and so can we find more of these ideal customers in the market? And when we did that, something magical happened, because our conversion rates, they just surged, so we do outbound activities where we call businesses that we think need our product, and our conversion rates surged from 3% to 15%, for booking a demo in 1 quarter. And we realized that, the opportunity with this data, when you look at this process, is much bigger than just the credit risk management side of things. So that's, our vision is to find the best way to unite, finance and sales, because they're linked together through this process, by helping them basically, de-risking their sales funnel. So how can we make sure that when they invest in growth as well, when they invest in marketing efforts, and they invest in sales efforts, that they avoid all those bad payers up front, so they get higher conversions, because they're better suited to their segment. So that's how we see, the vision is really to bridge those two businesses, those two departments in these B2B companies, and get them to speak the same language through data and automation. Yeah.
One question. So this is great benefits that you're describing that Risika gives to clients, right? If clients were to describe Risika from your point of view, from their point of view, how would they describe it?
We actually had an interesting exercise where we were trying to define our brand positioning, where we asked some of our clients to give us just, what was one word that defined Risika. And interestingly enough, it was not something like we thought it would be, something like, precision or automation or something like that. It was actually flexibility. And we've used that quite a lot in our communication, because we found that, being flexible in the way that your product sort of, binds the organization together. I'm a little bit back to the implementation part, but having a product that is flexible in the way that it facilitates, across department collaboration, I think it's very important. It's something that we found was very important for our customers, but also, just being close to them. So we do a lot of co-creation, mainly with our larger clients, where we look at the problems that they have together, and then we see if we can help them build the right solution using our engine for that. But yeah, flexibility was the key word, and I believe we have a pretty flexible organization as well. We can be really close to our customers.
So this brings me to the next question. How did you manage to create trust with these new clients, of probably leaving old models behind and trusting you with this new product in the market?
That's a great question. It wasn't easy, I would say, because it's definitely a trust product. You we extract the right, the right data, and we process it in a way so we get to the highest quality of data, but also we can calculate it in a most precise way, and then we can deliver services that are always on. So there's a lot of trust involved in this product because, taking the fully automated scenario where you link our product to your B2B web shop, and it just makes the decision automatically for you. Who should you give credit and who shouldn't you? In that case, you really need to trust that we build it right. And I think a part of it was just trying to be humble in the situation when we were with the early customers, really trying to ask them the right question and really trying to show that we were trying to understand, from their perspective, how we could solve that in the best way. That was a way to create trust in the early days. We also, just from a branding perspective, we didn't go for, all out on the whole startup, branding. So we didn't want to brand us as a startup because that didn't really make sense in our But also we had customer meetings where we could feel like they basically said, well, let's see if you're here, in 2 years or in 3 years, because they didn't want to take the chance. So it definitely, and we've been at it for 5 years now. So it's been a journey, really building that trust. So there's some different parameters, and also just talking to the right customers. So we were a little bit too broad in the beginning, trying to focus on many different industries and many different segments.
Was that intentional, to focus on a larger?
I would say it was more of a mistake, I would say, or a learning you do as an entrepreneur. That the more you can focus your customer, target segment in the beginning, the more you can focus your value proposition on just solving a very niche thing, is the best way to grow in the beginning.
Yeah.
And we had to learn that the hard way. So no, I can't say it was intentional.
So you're mentioning a lot of learnings that you had throughout these years. What were the biggest challenges that you faced, and what did you learn from them?
Well, what we're just talking about here was one of the big challenges. Really nailing our ideal customer profile and really understanding how to communicate this product in the right way to the right customers, because it's not an easy problem to understand, and it's still hard to explain my mother what the credit score is. So we've definitely struggled with just how can we convey this problem and our solutions in a more simple, straightforward way. It's not one of the things, but also just targeting the right customers and really focusing on a niche, and that's also part of the reason why we want to expand our proposition to be more focused on the sales enablement part, because we believe there's a lot of opportunities in helping businesses with also defining who are their the most profitable customers and helping them get more of those, but always in compliance with the credit policy, of course. So you can limit the downside and get more more out of the money that you spend on growth. That's a very interesting link there. And sometimes I always explain it like it's a bit like a stock. Like it's for a time it's very easy to get a high return, if you do stock trading. But eventually, if you don't focus on the risk side of things, you will lose your money. Because you can just if you don't care about the risk, you can just invest everything in Bitcoin, and that's the risk side of things, and this is basically the same that we do, because for some businesses it's not about minimizing their losses. It's actually sometimes it's more about maybe loosen their credit policy a little bit and say, okay, you can actually grow more if you do it a little bit less conservatively, or help them, if you open up this industry or this market, there is a great opportunity without taking too much of a risk. So we want to help businesses understand those dynamics, and unfortunately we just meet a lot of mid-size small to mid-sized B2B companies that are either very top-line driven or very bottom-line driven. They don't really see the whole picture of it's about finding the right balance. So
is that also a challenge, not being able to explain the value to the possible clients?
So that's a matter of talking to the right people, I would say. So for us, when we get to the right stakeholder, they understand, the issue, understand the problem. It's and that's a part of, so you find the right target customer, you find the right, buyer persona who's actually buying your product, who understands this problem, and then you focus your efforts on that.
I must admit, I went on your website and I loved the way it was built, because there's the section, I think, for customers, and it says, for you, if you are a CEO, a CFO, someone else. And according to which page you go to, there's different advantages explained to you, probably in the lingo that would make most sense to them.
Yeah.
That was, I thought it was lovely. It was perfect.
Well, I'm happy you said that. We just launched, on the website, risika.com, and it's definitely a focus area for us. How can we communicate this in the most, crystal way? And we found that, we're talking to different stakeholders. They see this differently, and we need to speak to them in a different language.
Is there any particular value proposition that you realized that you didn't know that you could have created given the product that you were selling?
I'm not sure I'm exactly answering your question, but what we've found is that we thought that we should just, that we were just doing, credit scoring and credit risk management. And what we found was that this process is just touching a lot more parts of the organization. So I've mentioned the sales part, the sales organization, which is where we're focusing our efforts now. But there's also compliance, for example. So some of that data we collect and we process, it's used for compliance purposes as well. So for your KYC, we have customers that use our data for that purpose. We also have pricing, for example. So another way to limit your credit losses, that's what the bank does as well. It gives you different interests based on your risk, and that's a different way to work with this problem, is that you just give higher prices if there is a higher risk. So you can see that this process, there becomes involvement of different parts of the organization, and it's been the hardest challenge. Also going back to your question before, one of the hardest challenges has been just focusing our efforts on what we believe creates the highest value here and now, because there's just too many opportunities to solve, and how can we make sure that our overall value proposition fits together, so we don't just build all these different small components that don't fit together, because then we will just end up in the same with the same situation that there were before. Yeah. I think that's the best way I can. That's one way to answer that. So
is there something that you had started to build and then you dropped off because you realized that it was taking you towards this challenge?
Yeah, definitely. So take real estate data, for example. This is something that we can collect in Denmark, at least. It's a little bit different in the other Nordic countries, and we also extract from other European countries like UK and Germany, where it's more scattered. But the real estate data you can get in Denmark is actually quite good. It's pretty difficult to build a good way of extracting it, but let's disregard that. But what we found was that it became a niche area that we had to spend a lot of time on developing that specific part of our value proposition, and it could only be used for very specific types of of companies. So that's one of the things where we started building something, and we have the data available at a certain level, but then we just said, okay, now we don't want to build any more on top of this because someone else can do it better than us, and we rather want to focus on other areas. So we can provide the data in high quality, but we don't want to build any other solutions on top of that. And we feel a little bit the same way with compliance. We would like to help other businesses with the data, so they don't have to extract it and structure it themselves. That's something that we've become quite good at. But building a KYC solution, for example, it's not something that we would like to enter into, because it will be defocusing our efforts. And you can say the same thing about factoring and leasing and credit insurance. It's the same engine, but we want to be really good at extracting the data, building the models, and providing APIs that can help other businesses in that areas. But then with the credit risk management and the sales enablement, where we really want to be good at the front end solution as well. So it's a lot about focus.
Great, that was a great answer. Thanks a lot. So let's shift focus. So far we've been talking about the context in which Risika works in, the problems that it's solving, how it is solving it. But how did you come to realize that there was this problem existing in the first place?
So it actually wasn't me. It was one of my co-founders. Nikolai. He was working for PwC as an auditor. So he was in very close contact with the CFOs in these small, medium-sized businesses. Also some large, by the way. But he was in close contact with these B2B businesses, and he. During this, this auditing of their, financial reports, he discussed this issue with them, because he didn't really see any CFOs that were particularly happy about the solutions within the, within the space, and he could see from the reports that they were losing money. So he started asking some questions, and that was where the idea originated, was because there was just very low satisfaction with the current solutions, and there were a lot of manual processes involved with giving credit, but also monitoring, your credit risk in your portfolio and so forth. So then we met up. I have a career in banking, so I knew a little bit about the problem as well, or the space, and we decided to look deeper into this.
So how did this entrepreneurial journey unfold for you? You met up at a bar, discussed this, and were like, let's do this.
So
how did it unfold?
So yeah, no, it goes a little bit further back actually. So one of my other co-founders, Torbjørn, he has a venture fund now called Morph Capital. Me and him, we go all the way back to high school, and he's always been involved in, he started businesses, he was investing in emerging technologies from an early age, and he was I had a lot of great talks about him, about why do you want to become an entrepreneur, and also a lot of other stuff like macroeconomics and so forth. And at some point during my master's degrees, where I actually had entrepreneurship as a course in the US, I realized that I wanted to become an entrepreneur. So based on my conversations with my co-founder before he was my co-founder, and this course and everything. But I wasn't ready to do it. So before I even started my full-time career in banking, I already knew I was going to be an entrepreneur. So it was a matter of time, so to speak. But then after 3.5 years, where I didn't had the courage to take the leap, he came to me with another project that we started together. That didn't work out. Long story short, we started Risika together with Nikolai and our fourth co-founder, Christopher.
So it's a series of trying, failing, trying something new, seeing how it's going, learning. Yeah, well, I think that started when I dropped out of corporate, so to speak.
that's really where it started. So we really like this whole lean startup thinking. So like test, learn, evaluate, build, and then as fast as possible you can go through that cycle, the better. And that was one of the that was one of the foundational sort of pillars for us when we started the business, that we wanted to do that iteration process. And I really don't think there is any other way to build a successful startup. You need to have that mindset, and you need to practice this. Otherwise, it's just gonna you're gonna run out of money, or
So, was there ever a shock moment when you were transitioning between this non-entrepreneurial life and entrepreneurial life?
Yeah, I remember particularly the first time where I had to do sales, or more specifically, I had to do cold calling, and I did it for I think for 2 weeks together with the sales coach, and I didn't book a single meeting because we were calling the wrong companies. I found out about that later. So yeah, 2 weeks of cold calling, no meetings, and I just had to take 3 weeks break, and that was the point where and the only point, luckily, where I thought, okay, this is not gonna happen. I'm not gonna, I have to go back to, my 9-to-5 job, and it was really, really stressful. But then, we found a way out of that. Focused on some other type of customers, and did some more market research, and here we are. But I think that was a critical point for me. That was brutal. Yeah.
So you quit your job 100%, and you focus 100% on these new projects with your colleague and then co-founder. You didn't have a transition period in between to check, to test the environment around you, if it would have worked, if not. So a safety net, let's call it like that.
Yeah, no, I had 4 months where I was working on this other project, and working in the bank at the same time. So I basically I clocked in 8 hours a day in the bank, and then I went to work with 8 hours on that project, and it was a fun time. It was a lot of hours, but then after 3 months I decided to quit my job. And after 3.5 months after I quit my job, we realized that it was not going to work, because we've been through the cycle, and we found out that we couldn't sell the original project. So we actually decided to close that down. And then I had this, I was just standing there without a job and without, an idea, anything. But I had a good co-founder that I wanted to build something with, and I just decided that I'll give it a year and see how far that will take me. I just need to, I need to have, some sort of cash flow or some sort of funding. Otherwise, the punishment is going to be that I will have to go back to banking. And I knew I wanted to try to become an entrepreneur. And yeah, luckily after a year we had both funding and the first customer. So that was something to build on. So that was the...
Great, that's a great story. So this brings me, our audience, it's probably someone that is following a similar path than you. They're probably already having some fintech startups, they're building them, perhaps they're thinking of doing it, going for it. What did you call it before? Dropping out.
Yeah.
And we have covered many challenges that you faced throughout this journey of yours. If you were to give one piece of advice to people that are about to live, or perhaps are already in this environment of fintech entrepreneurship, what would the advice be?
I'm sort of 50-50 in between two. There's two types of advices I always give new entrepreneurs. Like the biggest reason for why startups they fail is because of the team. So one of the things that I believe we did really well in the beginning was that we focused a lot on getting very high level of alignment and trust in the founding team. And that is I think the most important advice I can give to early stage entrepreneurs, is to focus on that. Because if you don't do that, there will come some very challenging situations. No matter what type of startup, there will come some very challenging situations. And if you're not fully aligned and you don't know each other well enough, and you haven't, understood each other's perspectives and weaknesses and strengths and so forth, it's unfortunate that's a very high likelihood of failing with your startup. So I think that's the most important advice I can give.
And what's the other 50%?
Yeah, so the other one is back to our earlier conversation. So, ship your product as fast as possible, get the first paying customer. But then when you have that first paying customers, the thing that we did was that we were focusing on customer number 10, and we should have focused on customer number 2. So we should have found a customer or a potential customer that was exactly like the first one. Like in all shapes and forms, we should be as close as possible to the first one. And then if you can find that, you can find number 2 and number 3 and number 4, then you can start focusing maybe on number 10. But it's really about, who has the biggest problem that you could solve right now, and then just only focus on that and forget about all the rest. You can always expand and focus on getting that first, then second, and then the third, because that will give you the leeway. And that we didn't do that in the beginning, and that was a big mistake.
That's great advice. Thank you very much for coming.
Thank you for having me.
Leaving this pearl of knowledge.
Thanks for having me. It's been great.
Thanks.